Hello crypto enthusiasts and welcome to hashpi Crypto Daily. I'm hashpi, bringing you today's essential crypto updates in just 5 minutes. Let's dive right in. Breaking news, Bitcoin has dropped below $94,000 for the first time since May, triggering what market analysts are calling extreme fear across the crypto landscape. This dramatic price action has led to a staggering $1.1 billion in liquidations within just 24 hours. Bitcoin spot ETFs saw massive outflows, with approximately $867 million leaving in a single day. Technical indicators aren't looking great either. Bitcoin is hovering around critical support levels between $93,000 and $94,000. We're seeing signs of an imminent death cross. That's when the 50-day moving average crosses below the 200-day moving average, a technical pattern that could signal further downside to around $83,500. And it's not just Bitcoin feeling the pain. Ethereum and other major altcoins have also experienced notable declines amid mixed sentiment and leveraged liquidations. But here's something fascinating. Harvard University has made an extraordinary move, tripling its position in the BlackRock iShares Bitcoin Trust ETF. They now hold approximately $443 million in shares. That's a massive 257% increase in their Bitcoin ETF holdings. This bold institutional commitment suggests a sophisticated inflation hedging strategy and demonstrates persistent confidence despite market volatility. Meanwhile, retail investors appear to be selling, creating an interesting institutional-retail divergence. On the regulatory front, Japan is revolutionizing its crypto framework. The Financial Services Agency is set to reclassify 105 cryptocurrencies, including Bitcoin and Ethereum, as financial products, subject to insider trading rules. Perhaps most importantly for Japanese investors, the tax rate on crypto profits will be reduced to a flat 20%, down from rates that previously reached as high as 55%. This legislation is expected to be enacted next year and aims to develop onshore crypto trading by allowing banks and insurance companies to distribute digital assets. In contrast, U.S. prosecutors continue their crackdown on privacy-focused crypto tools, opposing acquittals in the Tornado Cash developer case. This highlights the growing regulatory divergence between jurisdictions. In tech and innovation news, Solana is preparing major network upgrades through the FireDancer and Alpenglow initiatives, aiming to improve transaction throughput and consensus efficiency. Despite Sol's recent 26% price drop, a major Solana treasury fund has announced a $50 million share buyback program, signaling strong internal confidence. Hong Kong is making moves too. Authorities there have launched a live pilot program to test tokenized deposits and digital asset settlements, bridging traditional banking with tokenized instruments. Looking at predictions, FundStrat's Tom Lee points out that Ethereum's current price trajectory resembles Bitcoin's historical 100x growth cycle, despite the volatility. Bitwise CEO Hunter Horsley highlights Bitcoin's relatively small market cap compared to traditional assets, projecting substantial growth potential. Many analysts view Bitcoin's recent declines as healthy corrections rather than structural failures. If key support levels hold, medium-term recovery gains of 15 to 26% are plausible. However, experts warn investors about persistent market maker stress and advise against using leverage. Speaking of which, security alert. The Yala stablecoin has experienced a major depeg event, losing over 50% of its value in 24 hours and falling to just 44 cents. The issuer has launched an investigation following reports of suspicious lending activities and liquidity stress. Meanwhile, leveraged Ethereum trader Machi Big Brother has reportedly suffered multi-million-dollar losses on highly leveraged positions, illustrating the persistent risks in leveraged crypto strategies. So what's the bottom line for today? The crypto market is experiencing extreme volatility and extreme fear sentiment, with Bitcoin testing critical support levels. Yet institutional commitment remains unprecedented, as evidenced by Harvard's massive Bitcoin ETF investments. New regulatory frameworks in Japan and technological advancements from Solana and Hong Kong show an evolving ecosystem. But security remains a major concern, with stablecoin incidents and leverage-related risks. My advice: Prepare for continued fluctuations, avoid excessive leverage, and closely monitor support levels. Consider recent weakness as a healthy correction phase in an ongoing growth cycle, and look for selective accumulation opportunities. Prudent risk management and diversification are essential. That's all for today's hashpi Crypto Daily. Remember to protect your capital, and I'll see you tomorrow with the latest updates from the crypto world. This is hashpi signing off.